Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Matt D. Fothery, Lee Boyd, and Rob Beller.
Hey, podcast world. Welcome to another informative, exciting, big episode of FNO InsureTech with your hosts,
Lee Boyd.
Lee.
Yeah.
Lee, that's my job. You're taking my job from me.
Well, I jumped in. I thought I'd help you.
You're a jumper. You're a jumper.
And I'm with Rob Beller.
Thank you very much. I am your co-host.
Mm-hmm.
I'm the Rob to your Lee, you might say.
Yeah. Hey, Rob, guess what?
What?
We have a big episode today.
Really? Tell me about that.
It's a big deal. I mean, we get to talk to somebody who has been in the industry of innovation and transformation and has been at some of the biggest name companies out there.
Right. You mean biggest name insurance companies?
No, biggest names out there like Apple and eBay and Hewlett Packard and Citi. Big names.
Wow. So this is somebody who has not been necessarily in insurance.
Yeah.
But a C-level executive?
C-level executive who's been in insurance for a little bit under 4 years.
Courageous move.
And she is innovating and doing strategy at this company.
That can be no one else but Debbie Brackeen, Chief Strategy and Innovation Officer at CSAA Insurance Group. Is that who you're talking about?
That is exactly who I'm talking about. We are going to get to visit with her about what she's doing at CSAA, about why she went there, and then about her past life and lessons learned and just some great little nuggets of information.
Lee and I have been talking that there's some guests that we have on that our normal length is maybe even too long. And then there's some guests that we have on, like Debbie, who one episode can't contain everything there is to explore with her. But we did our best here today, and we tried our hardest. And she is not only a super interesting, experienced, intelligent person, but also really, really nice and generous.
Very nice. Yeah, just a genuine person, very kind, it seems like, and a great speaker. I think everybody's in for a treat here.
We're glad you're with us for our journey with Debbie, and come along and listen to our episode. With that, without further ado, we will get to our interview with Debbie Brackeen from CSAA. Hey, everybody. We are here with our guest, and I'll go as far as saying a very special guest that we have with us today. It's Debbie Brackeen, Chief Strategy and Innovation Officer at CSAA Insurance. And we say special guest because Debbie brings a world of experience and knowledge from many different points in the technology universe. And we're going to talk about those today, as well as CSAA and what she's doing there. So let's start by saying welcome, Debbie. Thank you for joining us today.
Welcome.
Thank you so much. I'm excited to be here.
And we're excited to have you. We know CSAA well, as they are coincidentally a customer of ours. So
cool.
We're thrilled to have you with us. So let's jump in and talk first about what it is. What the heck do you do? What the heck is a Chief Strategy and Innovation Officer at CSAA?
Happy to talk about that. Well, as you said, you know CSAA well. For everyone else, we're a personal lines carrier, also known as AAA insurance. So we're over 100 years old, just like AAA. We sell personal auto and home through our AAA clubs across about half of the U.S., 23 states and D.C. We do about $4 billion in premium every year, and we have about 3,800 employees. And being over 100 years old, and like much, in my opinion, of the insurance industry, my role was created, I think, for the first time. We hadn't really had an innovation function or executive prior to my joining. really to try and get ahead of all the disruption that the board and the executive team at the time saw on the horizon, from the sharing economy to autonomous vehicles and everything in between. My job is really to help the company think about how to deal with the impact of disruptive things to our business and to our customers, but also obviously help us navigate them in a positive way, turn them into opportunities so we can continue to have the privilege of serving our customers for hopefully another 100 years.
Sure, and that must be personally very exciting because this is a time of tremendous either disruption or coming disruption, depending how you want to look at it. Is that correct?
Absolutely. Well, long before this current pandemic, which is a form of disruption that I certainly wasn't planning for, and I don't know who, well, actually, we could have been planning better for it, but um, I've spent, probably over 15 years of my career at this point, working formally, having the privilege of working formally and officially in innovation. I love technology, and disruption, can be considered a very negative thing.
Right.
But like the Chinese character for crisis, it's both threat and opportunity. And I'm a perennial optimist. I'm a glass half full kind of person. So I see the negative potential of disruption, but I usually get very excited about the, kind of more opportunistic portion of disruption.
I think you're absolutely right. I mean, disruption sounds like something that you don't want to go through, but it's tremendous opportunities. So it must be really cool to get to be the person that navigates between that world, this new world, and the kind of very well established, kind of slow to change world of insurance.
Absolutely. If you'd asked me 5 years ago if I saw myself working for an insurance company, or asked me 10 years ago if I saw myself working for a bank, I would have laughed out loud. No way. So
Never.
We'll do it for you.
yeah. But I grew up in tech, as you guys know, and I love technology. I'm insanely curious, and I'm just interested in so many things. And technology, gives me lots of opportunities to get excited about things like that. But it took me a while to realize, wow, technology changes economics of a lot of value chains and business models, and that is applicable to almost any industry. And the fact that insurance in this case, has been around for literally hundreds of years and perhaps hasn't changed as quickly as some other, or been disrupted as, early on as some other industries. To me, it's just a playground of opportunity. And I
Right.
think there's so much potential. And I feel extremely lucky every day to do my job because there's a lot of opportunity and I really, really enjoy it.
You must have days where you say, "Are you kidding me?"
Well, yeah,
I-
there are a few of those days.
My son is involved in a startup that does SMS, and his world moves at this lightning pace. And both Lee and I have been in the insurance world. We work exclusively on the claims end,
Right.
but we've been involved for a long time, and it moves very slowly. I mean,
Hmm.
decision making can take a few years, not a few days, and that must be something that's tough to get used to, or difficult. Or you say you're a glass half full person. How do you deal with that?
Well, I'm a glass half full person and I love a good challenge. So I have plenty of that relative to what you were just describing. Yeah, I think it was Alan Kay, or one of those super smart people from MIT, who coined the quote, "The future is already here, it's just not evenly distributed."
Hmm.
So I do have a lot of empathy for, let's say, some of my colleagues who've literally grown up in insurance, and they haven't worked in a different environment. They haven't been exposed to some of the things that I kind of grew up with professionally. Most of my career has been here in Silicon Valley.
Hmm.
And, I think if you haven't been exposed to something, how would you know to understand it, the first time you saw it? I mean, maybe some people could do that, but yes, I think having worked at some venture-backed startups myself, kind of during the internet boom bust era, startups today, their design frame, first of all, they have the privilege of being able to start with no baggage, no legacy infrastructure, no existing customers. So sort of it's all greenfield and they can literally start from scratch. And so, but if you're starting from scratch, you're going to design a mobile app, because
Yeah.
these mobile phones that we all walk around with are effectively supercomputers in our pockets. They're capable of so much. We're connected to everything, and the cloud enables so many amazing experiences. You can pull data from almost anywhere. There's so much you can do with data. I was just talking with one of my colleagues yesterday about data analytics. I have a labs team we have a small number of data scientists that are doing some AI and machine learning. And we're still early days, but it's getting better all the time. But it's one observation that I have, being relatively new to insurance, is no matter what channel of distribution or what mechanism by which we're reaching customers, we tend to think of analytics as very traditional measures. How many leads are you driving? How many quotes are you generating from those leads? Um, how many policies are you selling and binding? It's very basic analytics. If you do that all on a mobile, fully digitally enabled, experience, then you not only are monitoring those traditional metrics, but you can also look at clickstream metrics and other things. And I'm sure we're looking at on the marketing side at a bunch of stuff that's a little more sophisticated. But in the core business, I have an ex-colleague from Citi who started a fintech company that was lending to the underbanked or unbanked, unsecured loans. And we used to have conversations, and I was so fascinated because he would say, on the third of 5 questions that we ask our customers when they're applying for a loan, if they hover over that answer for 28 seconds or more, it correlates to a better underwriting risk.
Wow.
That's a very unusual, kind of
Yeah.
metric, but that's the kind of stuff that I get really excited about. So I just try to keep an open mind and try to share examples like that and help people see that there's something more possible in our old industry.
I love that thought. I'm very interested. First, second, I want to get into your story. But before I do that, I want to ask the question that when CSAA hired you as the Chief Strategy and Innovation Officer back in 2016, what was the mission? What were they trying to accomplish with hiring you?
It's a great question because
That is a great question. You're not a traditional choice.
Yeah.
That's right. Well, I think, I just happened to have this conversation with our CEO, Tom Troy. I don't know, a few weeks ago, we were talking about development, and I was self-assessing that I've learned a lot. I've learned how to be a little bit dangerous and speak some of the language of insurance, but it's a very complex industry. It's one of the most unusual and different business models I've ever, worked with. But he said, actually your strength is that you're not an insurance expert. So don't get too smart about it. We need you to be that outside in, kind of voice. So I don't know if I can say exactly what I think the board and the CEO had in mind, but I give them a lot of credit for having the realization that a lot of change was on the horizon in our industry. More than,
Mhm.
I think it's about 2/3 of our book of business today is personal auto. And there are two very big things, happening, and a lot of money going into the sharing economy and ride sharing in particular, and autonomous vehicle development. And I mean, there's almost nothing more disruptive, certainly, than autonomous vehicles where people don't own their cars anymore and you just hail a fleet off of your phone. I mean, a car, off of your phone. It comes and magically swoops you up and takes you to where you need to go. You don't need a driver's license. You don't need an insurance policy. And liability is shifted from the personal driver liability, whether they own or lease their own car, to, I guess, product liability in the case of autonomous vehicles. And so they had two recognitions that were really critical. One is there's a lot of change coming. and we don't really know how to do innovation. We should
Hmm.
probably hire somebody who has that expertise. So I give them a lot of credit. I literally fell in love with the company and the culture and the opportunity. And here I am 3.5 years later.
That's awesome. I'm going to ask you a really big question and hope that you can answer this, you know, concisely. But how do you do innovation? You've had this tremendous career being involved in innovation. When you got to CSAA, you must have had to build a structure first to work with, or what was that already in place? Tell us a little bit about that history.
How do you do innovation? Well, I have had the benefit of doing it, for several years before I joined CSAA. I led HP Corporate Ventures for several years while I was there. I ran innovation for almost 6 years at Citi, and which was sort of my first foray outside of the tech industry. And I think there are some best practices. When I started doing innovation at HP, frankly, lean startup didn't exist yet.
Mm-hmm. Right.
Design thinking did exist, but was honestly not yet as widely understood or recognized or popular as it is today. So a lot has changed, but there are some best practices, and it was mostly coming out of the academia at the time. So I found some authors and people in the Valley that I really respected and I learned a lot from. But there are some best practices in terms of different functions, the innovation methodologies that we now call design thinking and lean startup, customer empathy, the notion of a minimally viable product or prototype, all of that. So there are some tools and there is a discipline. It's not well understood. I think for some people it seems like really fun and fluffy and not very serious, but there actually is a discipline and methodologies and tools for the business of innovation. And I've been using them for many years, and my team is structured around them and adopts them. There's different functions, and I'm a big fan. I learned kind of the hard way that we have under my division currently, we have strategy, which I'll come back to. But one of my things that I was very excited about in taking this role was what I call the happy marriage of strategy with innovation. There's a lot of innovation departments that are set up separately. In my opinion, you could be set up too separately, and then you have a whole different set of challenges. It's not easy to innovate within and alongside the core business, but I personally think it's a more powerful way to operate. And you have to be strategically aligned. And so the combination of strategy with our innovation functions, I think, is a really powerful combination. We have a lab. It's primarily a tech lab comprised of data scientists and blockchain engineers and folks like that. It's small but mighty. But I think, you have to stay abreast of emerging technologies. I think it's better if you have to engage the startup ecosystem in one way or the other in innovation. I personally think it's more effective to be an investor, a corporate investor. So we have a corporate venture capital function called Avanta. That was one of the first things that I was able to secure approval from our board to be able to do. So we're still early days. We've only been investing for about 2.5 years, but I think that's one of the most important functions in terms of really keeping your finger on the pulse of what's going on outside of your company, where the venture capital is going, what the new business models are, kind of being able to monitor early signals, what's taking root and what isn't in the marketplace. What are consumers gravitating to, on the experience side. I think those are all really, really critical signals. So, I think how you're structured and the functions and expertise you have is a big part of innovation. And, but I also think innovation it sounds fun, and it is fun. I love my job, as I said earlier, but it's also really hard. I don't think people realize actually how hard it is.
Yeah.
Sure.
Because we're not the core business. I mean, we're not paying the bills.
In fact, you're doing the opposite.
Yeah.
We're just extra cost. Exactly. So I
I'm
like
sure
to
the
say,
finance department has like this eye on you.
oh yeah, we can be everybody's favorite target. One of the folks on my team has a phrase that I've co-opted, but I really like it, which is I really view my team's mission and our role as it's not just about building an innovation function or department. It's really about building an innovative company that's, really focused on putting the customer first. And then obviously, competitively being aware of what's going on in terms of our competitors. Normally we might just think of our competitors as the other carriers that we, compete with, but all those billions of dollars going into venture capital going into InsureTech startups, those are upstarts chomping at the bit to take us down. It's,
Yeah.
in some
That's right.
fashion. And so, we have to keep an eye on that as well.
Debbie, I'm very interested. As I said, in a second, we're going to get to learn a little bit more about your background. But you are an outsider who's come into this world of insurance, and you've seen so much. You've seen so much innovation, so much change. Whenever you look at the insurance space, is a lot of stuff happening compared to the rest of the industry? Whenever I think of InsureTech, it's a big deal. It's changing the way that we do claims. It's changing the way we write. But it's really all that I know. So as an outsider coming in, is InsureTech and innovation within insurance, is it comparable to that with, like that's gone on in the world of computers or banking even? What do you see?
Wow, interesting question and a cool question. It's funny when I started I was at Citi running innovation for almost 6 years, as I mentioned, and I was lucky to join Citi in banking around the time of the fintech. Fintech, I remember actually asking somebody at Citi in our Citi Ventures team, is fintech around and I just didn't know about it? Or is it really a new thing?
Uh-huh.
Yeah.
And it turns out it was a relatively new thing. So I was lucky to join Citi right as the fintech boom was taking off. I remember going to, I think what's now, called Money 2020, when it
Right.
was like 30 people in a not very nice hotel, a few hotel rooms somewhere in San Francisco. And I saw the Collison brothers there talking about Stripe, which is now a
Sure.
massively
Huge.
valuable unicorn. That was pretty cool time to start at Citi. And because I think because I had been at Citi running innovation when I always say the fintech boom sort of spawned the insuretech boom.
Yes.
And some of recruiters started calling, and that's how I found out about the opportunity that I ultimately was lucky to get and brought me to CSAA. And I remember talking to a friend over dinner who's been in insurance for almost her whole career. And I was like, insurance, I just don't know. I don't know anything about it. I literally it never occurred to me that I might end up at an insurance company. And she was wonderful, and she said, I love insurance. And she told me why she loved it and how insurance. And she's worked for several large, global reinsurance companies. So she was talking more about, let's say, specialty insurance and stuff. But she was talking about how insurance really enables us to enjoy lots of the things in life that we would
That's
otherwise
right.
not be able to do. And I
Yes.
was kind of inspired by that. And it was just enough inspiration to get me to go to the interviews and learn more about insurance. The thing that I will say is, first of all, I'm old enough now and far enough along in my career. I'm pretty picky. I have high intellectual curiosity. So I need to go someplace where I can learn a lot. I love learning about new industries and new business models. And insurance is actually quite interesting because it's the only business model that I've interacted with or thought about where you don't know your costs before you go to market. You can
Mm.
estimate them, but you don't know them. That's like
Right.
just bizarre to me, um, being a little bit of a business model nerd. Technology is universal, and technology innovation, having grown up in the tech industry in Silicon Valley, technology innovation is just always moving. It's always on, and it's gotten faster and faster and faster. And a lot of technologies, like I think artificial intelligence, if you think about that, I guess you could call it an emerging technology, but it's been around for 50 years, and it's
Right.
only it's really only been within the last decade that storage and the availability of data and data dynamically over the cloud and these mobile devices and all of that has enabled it to, kind of get to its inflection point where, there's no turning back. And
Mhm.
that I believe will it has the ability to change the economics of industries. And I mean, Moore's law, the whole continuing increase in kind of the doubling of performance of a microprocessor,
Right.
at half the cost over and over and over again. We might be coming to the end of that. That's a dispute, or at least a debate. But I think technology has the impact to change any industry in multiple ways: customer experience, the economics of the value chain, whatever. And so I'm inspired by that. And I think that makes any industry potentially interesting, if that makes sense.
Yeah.
I think you're absolutely right. And it must be cool to get in relatively early. As much as going on in the InsureTech world today, I have to believe that you see it as, relatively early in its full development. And you, of course, have that perspective because of this background with some fabulous companies that you've been able to work at and help to lead. And we want to talk about that for a few minutes. And the thing that jumped out to me right away was you were at Apple for a relatively long time, at an early point. That must have been an amazing experience. Can you share a little bit about that?
Yeah, for sure. As it so happens, I am a native Californian, but I didn't grow up here. We moved around a lot because my dad was an aerospace exec. And I actually think my dad is where I got he's very entrepreneurial for his industry at the time. And I'm pretty sure that's where I caught the innovation bug. I just didn't know it for a while.
Hmm.
But I came back to California to go to school. And when I was at Stanford, I was able to get a Macintosh through the university discount program at the time. And I literally fell in love with it. And I think I talked about it so incessantly that somebody finally connected with me with somebody who worked there. And I ended up working at Apple, started working there before I finished college, actually.
Yeah.
And that turned into a 10-year career at Apple. And actually, launched my career in tech. I just sort of fell into it from that experience. But Apple was an amazing place to grow up professionally. I feel so lucky that I kind of fell into that situation. It was a very nonconformist type of culture and company, which kind of appeals to me. I think there were a lot of people doing
I'm not going
computer.
to give you a hard time about that. And now you're at an insurance company, but please go on.
Yeah, exactly. Um, but it was, there were a lot of people there. I think if you happen to have a computer science degree, it would be hard to get hired at Apple at the time that I joined, because they would be more inclined to hire somebody who was a self-taught programmer going to the
Mm.
homebrew club, and IBM was the 900-pound gorilla in the market at the time. And of course, we have the famous 1984 commercial kind of
Yeah.
making fun of that, which I'm old
Yeah.
enough to have been there for. But yeah, Apple was a fantastic place to work. And I still have very privileged to have very many close friends that I met back in those early days at Apple that I'm still quite close with. And so it was a fantastic culture. I'm trying to think about how to describe it. It was very, if you had, sort of the self-starter type of personality and you saw something that could be better or something new that we could be doing and you just mentioned it to somebody, the answer was always, yeah, you should go do that. That's a great idea. And it
Kind of a
probably,
dream.
yeah, it probably fueled, my interest in innovation, even though we didn't talk about it that way back then. But my personality is one where I would gravitate sort of to the next new thing. I still do to some extent. This is really dating myself, but the last 2 years that I was at Apple, I went to the Newton division, and Newton we used to call him a PDA, personal digital
Mhm.
assistant. But
Right.
that chipset that's in the Newton,
Palm Pilot.
yeah,
Mhm.
exactly. Yeah, and
Mhm.
there was the Go computer. There was a whole bunch of stuff going on at the time that was, looking at new kinds of devices and new modalities of interacting with the device, new user interfaces and technologies that supported them. And, that ARM chipset that was in the Newton, and the gentleman who helped design it with ARM, Mike Culbert, who's unfortunately passed away now, but that's the basic chipset that's in all of these smartphones today, so
Remarkable.
that product didn't survive and was not a commercial success, but it was one of the best experiences I could have had at that point in my career, because it was just was a completely different business model. It was a completely different set of partners and ecosystem that we helped create. And I learned a ton.
You proceeded through your career and had some interesting jobs, both in tech, and then you made the move to Citi, which must have been probably the same experience that you were explaining earlier, where you said if somebody would have told you were going to be working in insurance, you would have laughed. Probably if somebody told you were going to be working in finance for a big bank, uh, you would have laughed. But can you talk for a minute about working in fintech? And then I'm really interested in the transition from fintech to insuretech, or from finance to insurance, more accurately. And did one prepare you for the next?
Yeah, great question. Definitely working in the banking industry prepared me to some extent for insurance. I would say in at least two ways that come to mind immediately. One is just definitely banking was the most heavily regulated industry that I'd ever worked in directly prior to joining. And interestingly, when I joined CSAA and started working in insurance, people would say, "Oh my gosh, the regulatory, it's such a burden." I was like, "Well, I don't know. I think this is a little bit less regulated than banking in my
Sure.
experience." So that was one way in which there was some preparation that Citi, gave me going into insurance. The other one is, I don't know that this is unique to banking or insurance. I think it's probably common in many industries, but it wasn't so visible to me, I guess, before I was working there, which is that both at Citi and at CSAA, even to this day, and we're making a difference in turning this around through some of our innovation methodologies and programs, but just this notion that people are very oriented. There's some internal marketing, if you will, and talking about how we put clients first, we put the customer first. But my observation was that no, we don't. We're really thinking about solving our own problems and our own interests, making money, growing the business, and not enough focused on solving the customer's problems. And when I joined Citi, it was an interesting time because of I joined after, pretty soon after the economic crisis of that time,
Wow.
which seems to pale in comparison to the one we're dealing with right now. But
Sure.
it was still very visceral. I joined, I think, in early 2011, and I had been talking with Citi, since 2010. So it was, good year or two into the financial crisis, and it was very visceral. I mean, you could just tell, like, it was a big deal for the bank at the time. But just I remember one of the first innovations I got to work on at Citi was a new kind of mortgage and savings product, I guess you could call it. And the idea was to link a mortgage to a savings deposit account, so that, like, I'll just pick easy numbers for easy math. If you had a $500,000 mortgage and you had $50,000 in your savings account, you would pay interest for that month on the $500,000 minus the amount up to 10% in your savings account.
Mm-hmm.
And it's very complex to explain to consumers, but it was a huge value proposition for consumers in that over the life of a 30-year mortgage in that kind of scenario, you could pay off your mortgage faster and pay less interest on the life of the loan. So it was a really good value prop. And you had to go to all these committees to get things approved, even just to test them out at Citi. And I remember an executive, and I don't remember his name, so I can't betray who it was, but he was like, "Why would we do that? We're leaving money on the table." And I thought, well, Occupy Wall Street, protests were going on literally across the street
The
practically from the downtown.
99%, right?
Oh yeah,
Mhm.
it's like, and I'm like, well, because first of all, it's a time when we want to be rebuilding trust with the public, and banks had lost a lot of trust.
Yes.
And it's good for the customer, therefore, and if we can make some money, but it's not as much as we could if we didn't do it, but it's good for the customer. Why wouldn't we do that? It doesn't make any sense.
Yeah.
His remarks didn't make any sense to me. But and I think there's a notion of that. It's really easy when you're a successful, established, large, long-standing incumbent in any industry. Probably you have to always be focusing on optimizing your operations, being more efficient, saving money where you can, so that you can invest in things for the future. And so I think it's easy to get very internally focused and focused on your own problems. And you start hearing things like, well, that's really hard to do. It's going to take a long time. Our systems aren't architected that way. It's just really easy to get caught up in your own set of internal problems and lose sight of what the customer needs. And oh, by the way, the world has changed in the meantime, and maybe you should pay attention to that. Customers want things in a different way. So I think in that way, both Citi and CSAA have been fantastic learning experiences for me. Another observation that I have, which was very different leaving tech, most of the tech companies that I worked for, not all of them, but most of them were, did both hardware and software. And when you're
Uh-huh.
building a computer or a smartphone
Uh-huh.
or something that's a physical product and it's goes off a manufacturing line, it actually has to work when a customer gets it and hits the button that
Yeah.
says turn it on,
Right. Right.
And one thing that has been a really interesting observation for me, starting at Citi and continuing through to CSAA, is just, we have people who have the same job titles, product manager, and we have IT, it's not really R&D. We're trying to transition more to think more of an R&D mindset than an IT mindset. But just that when you don't manufacture products, when you're in more of a services industry, but you have products obviously that you sell, um, I think it's harder to really deliver, you know, to think about the holistic customer experience and how the customer thinks, probably not consciously, more subconsciously, about what the whole product is, and it's harder to deliver it and meet those customer expectations when you're not actually manufacturing something. Like the bank, we would end up with, in fact, I had this happen to me as a consumer. I have some checking account at Wells Fargo. I signed up for Wells Fargo when I was on campus at Stanford just because it was there on campus. I still am a customer today.
Uh-huh.
And I have this savings account that I was going to get rid of and consolidate with, into other accounts. And this banker literally told me, you don't want to get out of this account because it has features that are never going to go away. And you don't get them if you roll this money into that other account.
Uh-huh.
And so I'm like, okay, this is like 10 years
Yeah.
ago. I kept this account, but it's like, that would never happen in the tech industry. If when we were building computers at Apple, we were working on the computer that we were the first, like the first Macintosh 2FX. This is really ancient history. But while you're working on that was one where we said it was going to be wicked fast. You're working on that version of the Mac 2FX, but shortly after you start building that thing, developing it, you're already another engineering team is figuring out the cost reduced version of that product.
Right.
You know,
Right.
so you can lower the prices, but still have the same functionality and performance. And a different team is thinking about, and how do we make the next version, even more wicked fast?
Right. Nobody's saying let's stay with 1.0.
Exactly. And if you don't do that, you can't afford to be in that business because you can't keep manufacturing every single product, forever.
Mm-hmm.
And that notion of rolling forward products and, end of lifing some of them so you can continue to invest in future innovation is very natural, I think, and kind of ingrained in the tech industry. And it's not so much, I don't think banking didn't think that way. I don't think insurance thinks that way. It takes a
No.
long time to file a new product,
Right.
and it's kind of designed for the opposite of speed and innovation.
Right. I mean, you have companies like Hippo as an example who are
Hmm.
trying to bring different ideas, appealing to different thought processes on the part of the customer. And that's very exciting, but their underlying product is a homeowner's policy.
Exactly. On somebody else's paper in that case, at least initially.
Right.
Yes, although I think they're working on that. But how much have homeowners policies changed in the last decades? Not a lot.
Right.
And so, I mean, there's many insurance companies that are still on 1.0.
I mean, another similarity that I see between banking and insurance, and it's probably related to the regulatory component, is I think it's easy to use, like at the bank, and maybe it was the time that I was there, which was right on the heels of the financial crisis. And, that was a hard time, especially for the head of our mortgage business, because he was getting hauled into Congress every so often, having to testify on what happened with the mortgage lending kind of meltdown. But I think this idea that the regulators will never go for that. They won't let us do that, or that'll just be hard, from a regulatory. That was a big deal at the bank.
Mm-hmm.
I think there's kind of a version of that in insurance as well. I mean, and I got to meet the founder of Hippo several years ago, I think in 2017. So it's just getting started. And I think he talked about his father had been in insurance. He never
Correct.
never expected himself to be in insurance, but I loved that he pointed out that, like, who can read, their, what's that document called? The declarations
Right.
Deck sheet.
the deck sheet. Yeah. First of all, who reads it unless you're in the insurance industry? And even if you're a well-educated, like smart person and you can understand all that legalese, I mean, who wants to read it and who can understand it anyway? It's the worst customer experience. And then, unfortunately, in insurance, when a lot of people learn about what they are and are not covered for, is sadly when something goes wrong.
Right.
And they realize that whatever, the sewage line in the street that broke isn't covered, and that's their responsibility, or whatever it is.
Correct. I was just talking yesterday with somebody from another major carrier, and we were talking about earthquake. Sadly, that's when a lot of people are going to realize they don't have earthquake insurance.
Exactly.
Or they're not covered under their traditional homeowners policy. So back to this comparison between the two, I just have one last point or question I want to ask you about that, and then that is it fair for me to ask which is harder, innovating in insurance or innovating in finance or banking? Is that a reasonable question?
It's definitely a reasonable question. I mean, I've really only had the one experience in innovating at Citi, and my current experience innovating with CSAA on the insurance side, and I'm not sure that it's that different. And I think I mentioned earlier, one of the things when you were asking about, like, how do you do innovation? I think there's definitely methods and best practices and disciplines associated with innovation, but a lot of it, I think, is also more about maybe leadership and influence and helping people see and understand that there could be a different and a better way. So, from that perspective, I think CSAA, I wouldn't say insurance necessarily, but CSAA is a little bit easier. I'm doing air quotes, you can't see. In that, it's a smaller company than Citi, and so there's maybe fewer people to to influence and work with. But I don't see. I think it's kind of. I mean, business is comprised of human beings, and human beings don't like change. Change can be threatening, and it's an interesting mix, I would say. To you have people who know I mean, I don't even think when I started at CSA, for example, that I even knew that I didn't appreciate the differences, between the different kinds of insurance, personal, commercial. I mean, it's a complex industry, and I'm sure some of my colleagues are like, "Who the heck is she, and what the heck is she, going to tell us about this industry that we've been working in for our entire careers?" And the truth is, there's value in both. I think it's complementary. What I don't know about insurance, and I'm not afraid to ask stupid questions, and I am a quick learner, and I like to learn more about new areas and new industries, so I can add value from that perspective. Just asking seemingly stupid questions because I literally don't understand, and I need to understand a little bit better to be able to have a meaningful conversation. But sometimes those quote unquote stupid questions would have people saying, "Oh, actually, that's a really interesting question. I never thought about that. Maybe it's possible. Yeah, we could think, So I think the leadership and the people component is the same in my experience in almost any industry that I've worked in.
Yeah, we see a lot of that. And that's what makes today such an exciting time, for people like Lee and myself who've been in the industry for a long time. It was wake up and make the donuts every day for a really long time, the exact same way
Yeah.
that we always did. And that's really changed in the last few years, that wow, we can do it differently. And I think with every passing month, there's a greater acceptance of that. I also just wanted to say to you about that people don't know what insurance is. 99% of the time when I tell somebody who I don't know, or maybe am meeting or whatever, that I work in the insurance industry, they always say, "Oh, you sell insurance?" Because that's the only thing that they ever think about,
Yeah,
the insurance salesperson. But yeah, it's obviously a vast industry.
for sure.
I do have one more question that I would like to ask. So, what are you working on now in the world you're living in of strategy and innovation that might be realized in the next 3 to 5 years? What are your long term goals, or what is a long term project you're working on?
One of the frameworks that we use in my team, strategy and innovation, because it kind of spans both strategy, straddles both strategy and innovation, it's an old one, but I think it's a good one. It's the McKinsey Three Horizons of Growth model.
Yeah.
Where Horizon One, we think about that as, helping our core business in personal lines be better, could be more efficient, could be faster, could be a better customer experience, could be a different way to tackle a problem. And then Horizon Two is sort of what adjacencies are we expanding into? And then Horizon Three, which is the more long term, maybe 5 to 7 years out, that's how do we think about what's happening today and where it might land in the future, and how should we start thinking about those things? So in that long-term category, we're working on our autonomous vehicle strategy. I think there's a somewhat common perspective, or maybe consensus perspective, which is personal liability, so personal auto liability, where we underwrite a human driver driving their own car, is going to shift over to product liability for the autonomous vehicle that doesn't have a human driver. And so, one of the questions that I walk around repeating all the time is, we can underwrite a human driver driving their own car today. What would it take for us to underwrite that software driver driving an autonomous vehicle in the future? And
Mhm.
so we're working on that. It's early days. We have a lot to learn. We're lucky to be in Silicon Valley and close to a lot of companies that are, plowing literally hundreds of billions of dollars into this technology, and talking with many of them and hoping to partner with some of them on some proofs of concept and pilots on that front. It seems like during this current economic contraction and pandemic, most people are saying, AVs are not going to hit as early as maybe some of those folks thought. I think we have some time, but it's a fun problem and an interesting problem. We're looking at demographic changes in the population, and, becoming a majority minority country by 2045, I think, and looking at different, segments, whether it's a Hispanic population, which is just having tremendous growth, and it's really the driver of the majority minority shift that'll happen over the next, 10, 15 years. But the rise of millennials and Gen Zs, they're now the biggest, demographic segments
Right.
of our population. And I have a Gen Z. My son is 18. And when I started my career, we didn't have the internet and we didn't have email and everything that is just, now passe, I guess, on the email side. But to my kid anyway, you know, just thinking about we were saying earlier, people don't understand insurance. We've done some ethnographic research, how do Gen Zs think about insurance? It's really fascinating and interesting. So we're thinking about that.
What did you find there? I bet more than we give them credit for.
One thing that I don't think it's necessarily unique to Gen Zs, but I think this notion of value, and I'm paying value for what I'm paying for the Gen Zs, I think the notion of the kind of business model that like Trove was experimenting with, coverage for a single item for
Right.
a small duration of time, and this notion you can kind of swipe it on and swipe it off, turn it on and off kind of dynamically, dynamic pricing in general,
Mhm.
even subscription pricing. I mean,
Mhm.
the subscription as a business model is impacting a lot of different industries. I know, is it Toggle? I think Farmers launched Toggle, and it's like a renter's insurance product, and it's a subscription based thing. Subscription and being able to turn it on and off kind of flies in the face of the fundamental business model of pooling of risk, in insurance, at least to my understanding. So, but I think that's how they think about things. And generally, people, I think, have struggled. If you haven't had a claim for 10 years and you've been paying for your auto or home insurance and you suddenly do, and then your premiums go up, people are like, hey, I've been paying you for 10 years and I
Yeah.
haven't cost you anything.
Yeah.
I think that's an opportunity. It's a hard challenge, but it's one that I spent a lot of time noodling on. So, but yeah, so I'm really excited about autonomous vehicles. I would love to have one come pick me up and take me,
Yeah.
to my office when we get to go back to the office.
Yeah.
I'm excited about delivery drones and
Yeah.
kind of robotics in general. We're trying to, I'm really excited about our small data science team that we built in our lab. And they've, one of the investments the company had made before I joined was to kind of modernize a lot of its core infrastructure platforms. And we kind of got all the data in one place in a big data environment around Hadoop. And we're continuing to build on that. But we really hadn't, pulled a lot of our actuarial models, sometimes looked at only segments of our data.
Mm-hmm.
And a couple of years ago, we started on a journey of building our first machine learning based model looking at churn. And it was the first time we pulled together all the data from all of our core systems that we had internally, claims data, service data, et cetera, along with some third party data, like whether from Axiom or whomever, and just look for correlations in the data about when people churned in the middle of their kind of midterm churn, not just when they got a renewal license, maybe a renewal notice and their premium may have, gone up a little or something. It was hard to do because it was the first time we had done it. So, the data, it's always hard to get the data in a state where you can actually do something with it with a machine learning based model.
Yeah. Right.
But we're now piloting, those models across our territory. We're looking at opportunities to apply, AI in conjunction with some third-party startups around fraud, doing a better job detecting fraud. We were talking about Cape Analytics.
Yes.
We partnered with Cape really early on, a couple of years ago. I love their capability to purchase satellite and aerial imagery, apply machine learning algorithms to assess roof and surrounding property conditions. That saves us money on having to not send out human inspectors, which turned out to be super valuable in this pandemic that we're in right now. Similarly, one of our vendors offers photo, based claims processing for auto accidents. And, that was really, while that had been a relatively small percentage of our claims processing before the pandemic, and while claims volume has gone down, I mean, we had to go 100% virtual,
Sure.
with everybody sheltering in place. So
Sure.
I love innovation wherever it happens on the spectrum, whether it's in our core business or something kind of very futuristic. I'm waiting for the flying cars, the Jetsons.
I remember as a kid, I thought for sure by the time I was 16 that we'd be driving flying cars. Do you guys have kind of a working target date? I mean, like you said, you're close to Silicon Valley. You must know a lot of companies and people involved in developing autonomous vehicles and autonomous protocols. Is there a target date that you guys see out there when it reaches a tipping point where we're really going to see a lot of it going on practically on the road?
Well, I don't know. Tipping point is an interesting phrase to use there. I think that autonomous vehicle, so the short answer is no, I don't know what the year is. I don't think you can wait to start thinking about it because it would be,
Agreed.
it's highly uncertain. So that's part of why we're working on it now to be ready whenever it does happen. And it won't happen in the same way in every location
Hmm.
at the same time. And
Mhm.
so, we've been talking to companies that are using relatively simplistic autonomous vehicle technology in retirement or university, communities where you have defined roads that don't have all the normal traffic, let's say, and it's a more controllable experience. It's a less difficult mapping problem. Those businesses are out there today, shuttling people around on AV shuttles and stuff. That's really different than a level 5 autonomous car, driving on the highway with a bunch of other cars that still have human drivers and
Mhm.
big trucks and everything else. I just attended the Information's AV Summit last week, I think, virtually. And I think the consensus was most of the AV companies are unwilling to give a date. They're emphasizing the importance of the edge cases of autonomous vehicle sensors and being able to interpret things that maybe an AV, sensor or a car has not seen before. That's the hard part, and it's going to take a while. And they're committed to not putting anything out there till it's they can verify its safety. But there did seem to be a consensus that it'll happen first in long haul trucking,
Right.
which I kind of believe. So there's obviously test vehicles out there today already in a number of communities and in many in our territories here in
Sure.
California and Arizona, et
Arizona.
cetera. We're working now so we can be ready whenever it does, reach some form of tipping point.
It's an incredible question, but like you said, if you have 2/3 of your revenue stream tied to auto insurance as it traditionally exists, I'm sure that's a major imperative that you guys are working on. As we bring it to a close, I mean, we didn't we ran out of time, unfortunately. We didn't even get to COVID, and I know that you just wrote about it. I saw your post on LinkedIn. Does COVID make digital go faster? Does it make innovation go faster? Any thought on that or insight?
From an innovation perspective, I think that if you had asked anybody in my company, could we take the whole company to a working from home model in the next week? Would that be possible? Nobody would have said yes. And yet we did it.
Right.
I mean, it went amazingly smoothly. And I'm so proud to work for CSAA and our commitment to our employees and their safety, to our customers with our premium refunds, to our vendors like our cafeteria workers who were still paying and were purchasing food so they can make at least 500 meals a day for local food banks,
Awesome.
for kids who get their meals from who used to get their meals from schools and stuff. I mean, that's just tremendous. So I love that from an innovator's perspective, because I know we can do anything. We can do more than we ever imagined that is possible. And that's a really important insight not to lose, even after we get to whatever the next normal is coming out of COVID.
I think you're absolutely right. We've seen that in our end too from carriers, that I think they've surprised themselves how much they really can get done quickly if you have to.
Exactly. And so to your question about, digital and is everything going to go digital post COVID? I think the answer is generally yes. I mentioned earlier, we happen to already have been working with some partners on like Cape Analytics on with technology that allows us to do home inspections or or even inform underwriting decisions without having to send an inspector out to look at a house. So that turned out to be really convenient to have already in place when everything had to go virtual. We were already doing photo claims. I don't see us going back. I think we're only going to continue to push forward and do even more virtually. Whatever can be digital, paperless, virtual, we're going to push to just keep doing that and do more of it, because it's more efficient. You have better, faster customer outcomes. It's less costly for us, so we can invest in other new value add things for our customers, et cetera. I think from a consumer's perspective, if there, I already was a, Amazon Prime user and DoorDash, food delivery user and stuff like that. If people weren't using some of those services, capabilities before the shelter in place orders, they certainly, had to start learning how to do it. If they weren't using home teleconferencing, whatever, they have had to learn. They've been forced to learn how to do it. I think those represent behavioral shifts, kind of where you can't put the toothpaste back in the tube. I think in the insurance industry, right? People stopped driving their cars. That's why all the insurers have been giving premium refunds, and we did as well, because, frequency is down, less claims. It's the right thing to do to refund people's money. So if people weren't aware before all of this that the number of miles that they drive is completely correlated to what their premiums are, they certainly are now. So some of the questions that and conversations we're having internally, we have a usage-based insurance product. It's behavioral, not mileage-based. There are mileage-based solutions out there. Metromile is one, and some of the big carriers have them. Should there be a pay per mile, kind of model? Does that work economically? So, I think some of these behavioral things don't kind of turn back and go back to quote unquote the way it was before. And I think that's job number one, certainly for my team in strategy and innovation, is helping make those things visible and kind of drive those conversations and debates internally so that, wherever the consumer expectation is going, that we can kind of, make sure we're there with solutions that make sense.
That's a terrific insight to end with in an episode that we've gotten tremendous insights and information from a leader in our industry today. Congratulations, you're a leader in the insurance industry.
Who would have thunk it? Thank you.
Who would have ever thought? You've made it. You're in the big time now.
You're there.
Oh, dear. Oh, dear.
And we said to Debbie earlier that there's so much here to talk about that Debbie covers that we're probably going to have to do 2 episodes. So I'm just telling you right now that episode number 2 with Debbie Brackeen is coming up soon. Everybody stay tuned.
Awesome.
And we'll ask her later.
But we have to thank you for episode number 1 first.
Yes, thank you so much.
Thanks for being with us, and we really appreciate it. And thank you to your team who really helped put this all together.
Well, thank you, Rob and Lee. It's been really a lot of fun for me to chat with you guys, and good to know there's a Santa Cruz connection in the house, as they say.
Yeah, in fact, I'm going to need that address because my wife and I are coming next weekend. So,
Awesome.
All right.
Provide
Okay.
it.
Thanks.
Thank you. Have a good day.
Thank you so much.
We were just talking before we started the outro just now that I guess like Debbie has so much interesting background to talk about that it's hard to cover it all in one episode.
Yeah, it is. I mean, if even just looking at her resume, there's so much on there. I really feel like we got an all-around picture of what she's doing at CSAA and kind of her background, but there's still so much more we want to talk about. And we just barely touched on the impacts of COVID, on her, on the industry.
Right.
I'd love to get her back on and understand a little more of her thoughts and what they're doing with that.
Right. We really need a part 2 there. But to talk about what she's doing at CSAA and the challenge of coming really from outside of insurance altogether and just having that stop that she had in fintech, but being a technology industry person and moving into an industry like this must be not only really challenging, but also really interesting and a lot of fun. She's obviously a leader and a mentor and an influencer within her company.
Yeah, and she said that she has a thirst for knowledge. I summarize what she said, but she's always looking to gain more knowledge. And what's better than going into a new industry, using some of your past learnings, learning a new industry, than implementing? That's fun. That's exciting. And it's an industry that is thirsty for innovation, right?
Right.
It's needing that. So she can bring that skill set.
Right.
It's right up her alley.
It's right up her alley. And from what we know of CSAA, they're doing an amazing job with it. And so we thank Debbie so much for being with us. And again, we thank her team for making it happen. We encourage you to look into Debbie and to look into innovation. It's one of our favorite topics, and we can't thank her enough for being with us today, and for you to be with us too, as you always are. And for our Cracker Jack production team located in Texas.
Yeah.
We thank them, and until next time, we'll say
goodbye, everybody.